This news that we had yesterday that the FTC was not only reviewing a lot of the transactions, but specifically focusing on some of these smaller deals that I guess some people kind of refer to as catch and kill, where a big company sort of buys up a small company to either eliminate the competition or really just to poach their talent. What do you make of this? Does this investigation have any teeth?
This is a really great use of the FTC's power. And generally in antitrust, what we look at is enforcement actions. This is different. The FTC is unique in that it has the power to do an industry investigation without a specific law enforcement objective. So what they're really doing here is trying to understand whether there is a pattern and practice among these big tech companies of doing catch and kill, of making small transactions, generally below the threshold that has to get reported to the federal government, which is about $90 million of a deal price. And if they are, in fact, doing that, then the FTC would move to the next phase of what are we going to do about that problem.
Adam, I want to bring you in here. What does this do to the M&A environment? Does this have a potential chilling effect, particularly when you look at big tech companies and some of these startups?
Yeah, it's a great question. I think that's what all the tech companies we're talking to are trying to figure out. The truth of the matter is M&A is an important part of the growth story for tech companies, and we see that continuing. But this shift in regulatory focus on tech M&A is real. And they're going to have to think a little bit differently about their M&A capability and M&A approach. And I think there are really valid reasons why tech companies are looking at acquisitions and these smaller acquisitions that can be good for consumers. But they've got to factor in longer regulatory review times and be more flexible in the targets that they look at because the FTC's focus is real.
What does it actually mean to look at some of these smaller deals, though? Does the FTC really want to be in the business of predicting which startups are potentially going to be viable, successful companies in the future?
No, that's not what the FTC wants to do. They want to make sure that they're doing what's right for consumers. And tech is a challenging place to do that because the traditional means by which the FTC looks at competition are different in tech. And that's because in these small companies, that's where the disruptive innovation is happening. And that disruptive innovation allows small companies to grow and gain scale very quickly. And it's also a place where traditionally market share, largely defined by revenue, is what has defined the means of competition in most industries. But in tech, that's not always right. Sometimes It's things like daily active users that are a better sense of what defines competition. And so I think the FTC is trying to find out ways where they can better set the bounds of competition and then ensure that the right acquisitions that are good for consumers are happening, things that create more integrated solutions and pull together more growth opportunities.
So, Avery, I want you to come back into this conversation here because we did see a market reaction here that was somewhat pessimistic with regards to some of these large cap tech companies. There is this fear that this could lead to some sort of breakup or rollback of some of these acquisitions. Is that really going to be the case here? Are we really talking about retroactively going back and pulling apart some of these companies?
It's really hard to do that. I think the bigger concern is that there will be a tax placed on transactions by some of these very, very large companies. If you're a small company looking for an exit event, you might have to be paid more if you're going to be purchased by one of the tech giants because of the concern that the agencies are going to scrutinize that transaction more closely. So it may make it easier for slightly smaller tech companies to eat up some of the startups that otherwise they might have been priced out of before, because they will not have the same concern about an extra regulatory tax, if you will, on the companies that are not in the crosshairs of the FTC's current investigation.
Avery, I know all the focus right now is on big tech, but as I look at other industries, I mean, you think about Boeing and just how much control it has over the aerospace sector. Does this eventually push its way into other parts of the economy where we're rethinking antitrust at all different levels?
It's a great point because tech really isn't a sector, it's a vector, right? Every company in America is now a tech company. So I think we will see this expand from what we think of as traditionally big tech to include places like Boeing in the aerospace industry and certainly in pharmaceuticals. There is strong evidence in pharmaceuticals that big companies actually do buy up smaller potential competitors in order to kill development. That's a significant concern, and I think we will see this inquiry broadened.